Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Welcome to Saving with Silverman, starring Mark Silverman of Silverman & Associates. I'm Ron Stutz. I get a chance to hang out for a while here with Mark, and we talk about all the ways you can prepare and plan for making your retirement the kind of retirement that you want it to be on this show. And Mark, it's awfully good to be back with you today.
Ron, always happy to be here with you as well.
Mark, of course, a certified financial planner, professional, founder, and managing member of Silverman & Associates in Tucson and wherever you are in southern Arizona. We appreciate your being with us today. Mark's number to call or text is 520-333-7601. That is 520-333-7601. Call or text that number. You don't have to think about talking to anybody today. Just leave a message with your contact information, and a member of Mark's team will get back with you first part of the week, and then you can set a time to come in and have a conversation with Mark. No obligation and no cost conversation. One more time with that number, it is 520-333-7601. Mark, there are important ages. Certain things happen at certain ages in our lives, and I thought maybe you could explain why each of the birthdays I'm going to present here represent an important landmark as it relates to retirement planning and some of the things that folks ought to be thinking about when they hit these landmarks. First of all, let's start at age 50. Why is that such an important landmark, and what should folks who are turning 50 be thinking about?
Well, that's the age when a lot of people, some people it's even later, really start getting serious about their retirement. And I'm not saying other people aren't preparing earlier, but a lot of people, it finally hits them when they hit 50 that maybe they need to start putting money away, and that maybe that they need to retire, whether it be in 10, 20 years or whatever that number looks like. But what you are eligible is for catch-up contributions. So if you have IRAs and Roths, you could put extra money in, and once you hit age 50, the other thing is big with 401ks and 403bs, et cetera, you could put additional money in there, what's known as catch-up contributions in those accounts, which allow you to put more money away. It's hard to catch up, let me tell you that, if you haven't started early, but with these things in place, it makes it a little bit easier for you to put more money away. You still probably need to add to other accounts as well, even including those catch-ups if you haven't started until you wait till you're 50.
Okay, that's something to think about when you're turning 50. How about when you turn 55?
Well, 55, what you can do is there's an election called 72T. So if you're able to retire at age 55, which some of our clients are, you can't draw from your IRAs and 401ks typically without a 10% penalty. There is a way, however, it's called the 72T election, which allows you, not to get too complicated, but it allows you to start taking money out in equal payments, 5 equal payments, while avoiding the 10% penalty that you would have prior to 59 and a half. You still have ordinary income taxes that you have to pay, but we can eliminate the 10% penalty, which is a unique strategy for people that are, able to retire at age 55.
Okay. We've talked about 50 and 55, certainly a couple of landmarks, but what about the folks who are turning 59 and a half? Why is 59 and a half so important and so specific?
Well, that's the number where the age where you can start to withdraw off your IRAs, 401ks, 403bs, et cetera, without a 10% penalty. There's still ordinary income taxes, but you're not penalized if you withdraw from those accounts. So the 59 and a half is the magic number where a lot of people know that they can start withdrawing on those without that penalty.
Okay, so that takes care of 59 and a half, and certainly a lot of things to think about during all this period of time here. But when you turn 62, that's a very important age as well.
That's when you're able to take Social Security. That's taking it early. So you're taking it early. You are taking a hit for taking it early. There are some considerations you want to think about as far as if you're still working, income coming in, you may have to pay some of that Social Security back. If you have other income sources coming in, your Social Security can be taxable at 2 different rates. So there's more to it than that. So a lot of people just, when they turn 62, say, well, I'm going to take Social Security because I'm eligible. That's not how you want to make that decision. And we have tools in place that we can help you make the right choice.
And then, of course, I think this is a number that most people would realize is important for a number of reasons. How about when you turn 65?
That's the number for Medicare. So if you are able to retire early, unless you have a spouse that's still working or you're somehow able to take on some type of health care plan, you may be paying out of pocket and being on your own and having your own plan that you're paying for, which is probably going to be pretty expensive and not a great plan. especially here in Arizona with the few options that we do have. But age 65, you're eligible for Medicare, which, in most cases is going to save you some money, and it's a much better plan than something you can get on your own.
The next number on my list here is either 66 or 67. Why is that an important age?
That's the age where you're getting full Social Security. As we mentioned, 62, you could take it early, and then each year you defer it. It goes up a little bit. Full retirement is either age 66 or 67, depending on what your age is. And the benefits of that is that paying back the money that if you make too much, you have to pay some of that Social Security back. That goes away at full retirement age. You still have the part where Social Security can be taxable, though.
We're talking about the important ages at which you need to do something or at least think about something. How about when you turn 70 and a half? Why is that important?
So 70 and a half is when you have to start taking distributions out of your IRAs, 401ks, 403bs, et cetera. If you have a 401k and you're still working at that company, you don't have to take RMDs if you're still working at age 70 and a half. But if you have old 401ks, 403bs, IRAs, et cetera, at age 70 and a half, the government's now forcing you to take what's known as required minimum distributions. There's no penalty because that went away at 59 and a half. However, there's still taxes that are due on that money.
Okay. So we've talked about all these important ages, 50, 55, 59 and a half, 62, 65, 66, or 67, and then 70 and a half. And all of those are very important times. But the most important age of all is your next one. Explain that if you would.
Well, for planning for retirement, the sooner you start, the better off you're going to be. I mean, time is against all of us. We can't create more time, but the sooner you start, the more you have that to your advantage. If you start earlier, you don't have to save as much. So those are some of the things that you have to think about, I guess. So the line I always like to use is pay now and play later, or play now and pay later. So, those are kind of some of your options. But, if you are getting a late start, which people are, it's better to start late than never start at all. Because, no matter what you do, you can't always work forever, unfortunately. So you need to make sure that you can live off those assets at some point in time. For some people, it's going to be sooner. For some, it's going to be later. But understanding that you're doing the best that you can and making sure that you're going to have the type of retirement that you're looking for is the most important thing. And I can't tell you how many times people have come into my office and say, wow, I wish I would have met with you a few years ago rather than wait. And I always say, well, you're here now, and we'll give you the best advice that we can based on where you are now. You can't kick yourself for what you could have, would have, should have done.
It's always the time to start a plan for your retirement. It's never too early or too late to get a plan in place. And there are folks out there right now who could certainly benefit from your help. And I know that you'd be glad to explain all these different ages and why they're so important to folks who come in. But what else do you have to offer for those folks who come in to have a conversation with you?
Sure. Well, whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your opportunity to come in and have a conversation with me in my office to go through this process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. And I'll repeat, this is not a sales meeting. Rather, we will discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who is actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. That's 520-333-7601. If you want to get in touch with Mark Silverman at Silverman and Associates, that's the number to use, and you can call or text that number if you like. Just leave your contact information. A member of the team will get back with you first part of the week, and then you can set a time to come in and have that conversation about your retirement, and more importantly, your retirement plan. 520-333-7601 will make it happen. 520-333-7601. Mark Silverman is the founder and the managing member of Silverman and Associates in Tucson. I'm Ron Stutz. Mark and I will be back in just a moment.
You've got questions. We've got answers. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman. Ron Stutz here along with Mark Silverman. You hear Mark on the radio every week if you're a regular listener. And if you're a new listener, we certainly appreciate you being with us today. I think you're going to learn a lot. 520-333-7601. Call or text that number, 520-333-7601. That'll put you in touch with Mark Silverman at Silverman and Associates. The website, by the way, is savingwithsilverman.com. That is savingwithsilverman.com. Couldn't get any easier to remember. Mark, let's talk about reasons to get life insurance. A lot of folks come into your office and they talk to you about life insurance, how important it is and all this sort of thing. Life insurance is one of the most boring topics that we could possibly discuss. But a lot of people assume that it's just something they need while they're working and have kids at home. But there are a lot of other reasons that life insurance might be a useful part of your retirement plan that should be explored today, no matter what age. First of all, how about life insurance for income replacement? Would you explain that?
Sure. Yeah, life insurance has many different purposes, and I'm not just a life insurance salesperson. I don't believe everybody needs life insurance, but there are lots of uses, and in the right situation, it can make a big difference. But as far as income replacement is concerned, you typically see that where maybe you have one person that's been working, maybe one staying home and taking care of the kids, and if something happens to the person who's the sole income earner, you want to make sure that the other partner, as well as the children maybe, are taken care of. So it's used to replace that income so that person can maybe pay off the house, and making sure that they have money to continue on without that other person. So that's where we see a lot of it as far as replacing it. Where we also see it is, could be another use, is for people that are retired. Because as you know, if you have two people and they both are receiving Social Security, if one person passes away, the other person now gets the higher Social Security amount. However, they lose their benefits. So there is a reduction in income there, because instead of getting two Social Security payments, they now only get one, even though the one may be higher. And so we'll use it in those cases as well.
Okay, how about estate liquidity? What do we mean by that?
Sure. Let's say there's some estate taxes, which we don't see too many of those cases as much as we used to because the limits are so high right now. But if you have a very large estate, there could be some estate taxes that are due, or maybe there's some taxes that could be due with settling the estate. So you need to create some liquidity, some cash. And so having insurance in that purpose can serve that as well.
Okay, we've talked about income replacement and estate liquidity, uses for life insurance, and the reasons to get life insurance. Locking in a low premium. Explain that if you would.
Well, sure. So the premium is based on two things. One is your age. So the younger you are, typically the cheaper it is. And then two, your health. You have to qualify for it. The goal is you want to make sure that you're healthy enough to qualify, but also, locking in a lower premium. The nice thing is, if people have policies that they purchased many years ago, the cost of insurance actually has gone down. So other than, TVs, computers, et cetera, the cost of insurance has gone down. And the reason for that is because people are living longer. So maybe when you first bought that policy, your life expectancy was maybe 80. Maybe now it's age 88, let's say. So the insurance company can hold on to your money longer, which means that the cost of insurance is cheaper. So in a lot of cases these days, we're actually able to show people how, as long as they're still insurable, that a lot of times we can actually reduce the premiums that they're paying for the same dollar benefit amount, or sometimes we're able to keep that same dollar benefit amount and increase the amount that they get. So it's really a win-win situation. And so, shopping policies makes a lot of sense these days as the costs have gone down.
You're listening to Saving with Silverman with Mark Silverman of Silverman and Associates, and we're talking about reasons to get life insurance. How about transferring family wealth? Explain that if you would.
Sure. The nice thing with insurance is if it's done correctly, the death benefit paid is tax-free as long as it's a valid policy. So what I mean by that is, if you, let's say, are passing money on to your children or grandchildren, you could have a policy where at your death, that money goes tax-free to your kids or grandkids. And life insurance is one of the only ways to do that. So it's a great way to move money from one generation to the next because it has that tax-free benefit.
And Mark, what about business succession?
Sure. So if you're in a business where maybe there's a couple different partners owning policies on each other, where if one person passes away, the money gets paid out. So the beneficiaries of that owner get paid out of that company, and then the company continue on versus having to maybe sell part of the company or bring another partner in to create the cash to pay the beneficiaries. So it can be used very well in business settings as well.
Okay, and we're talking about just a couple more here, reasons to get life insurance, of which there are many, obviously. Tax-free income. How can life insurance provide that?
Well, so there's a way that you can create a policy which is basically using the cash value. This isn't term, but this is cash value, where you're using the cash value of the policy you're actually in a sense borrowing from it. So you're borrowing from it and paying yourself back. So what it is it's not considered taxable income. We use a lot of this with self-employed people where we may have, dentists, for example, are a great one, where maybe they don't have a 401k if they have a small practice, where we're able to build a policy which is going to be used for tax-free income in their retirement. And so it works great with all self-employed people that don't have a company retirement plan or maybe haven't felt that they needed to establish one, where they can put money away for themselves. And the plan is to develop it so where they can withdraw from that and have that tax-free income in retirement if it's structured properly.
Well, here's another reason to get life insurance, and this is going to get a lot of people excited because, this is a concern for everyone. You can actually get help with your long-term care coverage with a life insurance policy. How's that, Mark?
So what it is you're able to access a certain portion of your death benefit while you're still alive in certain policies, newer ones, that have a long-term care rider. So what it is you still have a policy, and let's say you have a certain death benefit of, let's say, $250,000. Some policies will allow you to use that $250,000 to pay for your long-term care expenses. So the nice thing with that is if you don't need long-term care, you still have that death benefit which is payable to your beneficiaries. In a lot of cases, you still have your cash value if you needed to get to it before then as well. So what it does is it gives you options. In my opinion, it's a much better way of solving the long-term care issue or having that conversation than buying traditional long-term care insurance. It's much more flexible and it gives you options down the road, which, unfortunately with most traditional long-term care policies, you don't have them. It's either use them or lose them. So if you do have them, great. If you don't need it, all that money you paid into it is gone and the premiums keep going up and up versus these policies, that doesn't happen.
Well, certainly, as we have discussed, there are lots of reasons to get life insurance now. And, everybody doesn't need life insurance, as you mentioned, but a lot of people can really benefit from it in a number of ways and may want to come into your office and have a discussion about that. What can you help them with when they come in to see you at Silverman & Associates?
Well, just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So whether you're a do-it-yourselfer or already working with someone else, this is your chance to go through this process we call the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you have always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? And I can assure you, I will not be trying to sell you investment or insurance products. And I'll repeat, this is not a sales meeting. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who is actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson, and the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We try our best to help everyone, however our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate because making smarter choices about your money impacts the quality of your life.
520-333-7601. You can call or text that number, 520-333-7601. And all you got to do is leave your contact information. A member of Mark's team will get back with you first part of the week. And then you can set a time to come in and have a conversation about your situation. You can assess where you are, and you may be in better shape than you think you are, and what kind of retirement you want, and how you can get there, how you can achieve that. Mark Silverman can help with all that. He's been doing it for a very long time. He's helped many individuals and couples and families and even different generations. So why not give Mark's office a call? 520-333-7601. Call or text. Don't procrastinate. You can go ahead and do it right now if you like. You're listening to Saving with Silverman. Ron Stutz here along with Mark Silverman, certified financial planner professional, the founder and the managing member of Silverman and Associates in Tucson, serving folks all over southern Arizona. We'll have more of Saving with Silverman coming up next.
Learn the path to a worry-free retirement. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman with Mark Silverman. Silverman and Associates is where you'll find Mark when he's not doing something out there, talking to somebody about something important. Mark, of course, is always in Tucson, it seems, except when he's on a trip, but knows Tucson, loves Tucson. He's all about Tucson. And wherever you are in southern Arizona, come on into Tucson and have a conversation with Mark. He would be glad that you did. He's a certified financial planner professional, the founder and the managing member of Silverman and Associates. 520-333-7601 is your number to call, and you can also use that number to text. Doesn't matter, whichever is more convenient for you. Just leave your contact information, 520-333-7601. That's 520-333-7601. Mark, as you know, we always get great questions from our listeners on the request line, and our first question today comes from Betty in Saddlebrook. And Betty says, Mark, I'm in the middle of a divorce after 30 years of being married. Do you think I'd be better off to get half of my husband's 401k or half of his pension? I like the idea of having a guaranteed income, but I won't be retiring for another 10 years, so it's not like I need the pension right now. What do you think?
Well, Betty, first I want to say I'm sorry for the divorce. I know that's a tough thing no matter which side you're on. But, it really depends. You need to sit down with somebody that knows what they're doing, and we're happy to sit down with you and go over it. But you have to look at a couple of different things. What's the value of the 401k? How much is the pension? Is that going to be taxable if you're getting it? There's lots of different things, and we have to kind of look at the internal rate of return of what each of those different situations can bring you. And if you're still working for 10 years, that also needs to be taken into consideration as well. You need to go seek out a professional, and don't go to whoever your current advisor has been. You and your soon-to-be ex-husband shouldn't be working with the same person. It's a conflict of interest. So let's say your ex is going to be working with the advisor you've been working with. You need to seek out somebody that's going to look out for your best interest that doesn't have that conflict. But like I said, we're happy to sit down with you, but it's a great question, but you need to have a professional look at your situation and make sure that you make the right choice.
Well, if you'd like to come in and have a conversation with Mark, we'll tell you how to do that in just a few minutes here. Thanks for the question, Betty. Our next question comes from Jennifer in Vail. And Jennifer says, if interest rates finally start going back up, should I change how I'm saving? I don't have very much in the bank right now because rates are so low.
Well, Jennifer, good question. Rates have changed. If you look at the 10-year Treasury, we were below 3, then it started getting to 3, and now it's kind of coming back down again, and it kind of keeps hovering between 3 and keeps going lower. But, the Fed's supposed to raise rates a couple more times this year. We'll see. But it seems like every time they do go up, they come back down. You should have a certain amount of savings, which should be, emergency funds, that sort of thing, which should be, the rule we use is 3 to 6 months worth of expenses. If you're still working, if you're retired, we even might say 12 months worth of expenses should be liquid. But as far as how your investing goes, that shouldn't change. Where interest rates are shouldn't change how your investing goes. You should have the right mix of stocks, bonds, et cetera, and breaking that down even further into how it should be allocated based on your goals and objectives, and if you're in retirement or how far you are away from retirement and that sort of thing.
Okay, Mark, we got time for one more question today, and this is from Kathy in the Foothills. Kathy says, my husband and I argue about money almost every day because we just haven't done a great job of planning for retirement, and it's starting to stress out both of us. Is this normal, or do we need some really serious help?
Well, great question, Kathy. One, it is normal. but you probably need some serious help as well. One of the things we do is when we build financial plans for people is put them at ease and really assess the situation. We don't take sides and say, he's right, she's wrong, etc. But what we're doing is really looking at the situation to make sure that you guys are doing the best job that you can. So whether you're still working or already retired, that you're doing everything that you can so you have the type of retirement that you want, or if you're already retired, to maintain that lifestyle that you want as well. So it's really putting all those things together. And like I said, I've been told that there is some part of therapy that we are providing, almost a therapist role as far as helping people with money decisions and that sort of things. And what they say is, we had a question about somebody getting divorced. I think money is the number one cause for divorce, is what the last statistic I heard, but it doesn't always have to be. So what my point is go meet with someone, whether it be us or somebody else, that can sit down and look objectively at your situation and answer both of your concerns to make sure that we can get you both on the same page.
Well, I know that there are folks out there other than Betty and Jennifer and Kathy who have questions about their retirement and how to get ready for it. And what can you offer them if they make the phone call to the number we're going to give out in just a moment here and come in and sit down with you?
Well, Ron, we've had some really good questions, and I encourage anybody that's interested can go to the website, which is savingwithsilverman.com, click on the media tab, and there's a place to submit your question. And there's a good chance you'll get to hear it here on the air. But now's my chance to ask you a simple question, and can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with many of my clients. They become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'll repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and risk and diversification and insurance and estate planning and healthcare? Are you having those annual reviews, but hopefully it's more frequently than that? Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601, or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. That is 520-333-7601. You can call that number, or if you prefer, you can certainly shoot a text in that direction, 520-333-7601. Mark Silverman at Silverman & Associates. Check out the website if you like, savingwithsilverman.com. But the all-important phone number, please remember this, and you can call it right now. If you procrastinate, you might not get around to doing it next week or next month or even next year. Why not do it right now? There's no obligation and no cost at all. 520-333-7601. That'll put you in touch with Mark Silverman at Silverman & Associates in Tucson. And Mark, it's been a good show today. Glad to be with you, and I feel as if you reached a lot of folks out there in the Tucson area.
Ron, always happy to be here, and stay cool out there, everybody.
Join us again next week for the next edition of Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.